What's going on, folks? Happy Friday, August 29th, 2025. As we wrap up the seasonally weak August, let's go through this week's biggest winners and losers. I think there's a lot of good information that has not only come out of this week, but also this month. At the beginning of the month, we were preparing for a seasonally volatile and potentially weak portion of the market. We know that August and September are the two weakest back-to-back months out of the year, but into October, markets open up, and November, December, and January are the three most bullish months in the market. So the trades that we've put on over the last couple of weeks, we're obviously targeting, for the most part, other than the short-term trades, we're targeting end of 2025, beginning of 2026, and we're starting to see the framework of those trades play out. Let's talk through arguably the biggest trade of the day, and probably the biggest trade moving forward in the short term is going to be the gold trade, right? So we've basically been long gold since the all-time high breakout back in March of 2024. We've been able to add in various times through this uptrend during these consolidation fractals. I know that it can be tough holding a position for sometimes upwards of weeks before it really starts to move, but remember, particularly inside of TTI, where most of us have jobs or we own businesses, we're not day traders, folks. We're looking to capture the biggest move that we can, the 80% of the meat in between the top and the bottom. And so gold we've been layering in over the last couple of weeks, and we're finally getting the move that we expected to get. Massive sideways consolidation going back to April. So the market bottomed April 7th. The rest of the market has absolutely ripped while gold has gone sideways, and now gold is starting to break out. As a matter of fact, we have the highest monthly close coming up in gold that we've ever had. So you can see here, we will be closing at monthly all-time highs, and we do have a shot. I don't know if we'll get it, but we do have a shot at closing at an absolute all-time high as well. We'll see if that happens. But gold, all-time high on the monthly. We have a position. This part of the market should really start moving for us. Next PT up is 345. It's very simple. Not particularly easy always, but very simple way to read the market. Uptrends tend to resolve in the direction of the primary trend. We know that liquidity is still entering the market. We fully expect gold to continue its uptrend. Give me 1 second really quick. Hang on. All right, I apologize. My nose completely shut as soon as I turned the air conditioning on, but it's way too hot not to have the air conditioning on. I'm in Brazil, and unfortunately can't have the windows open right now because my allergies are crazy, so I'm fighting an upwards battle here. So anyway, gold breaking out. Looks like we're going to stick the all-time highs. Congratulations. And then silver as well. Right? Silver, very, very good over the last month. We're going to stick a 13-year high, I believe, on the monthly. In silver, we have a position in silver as well. We were just adding in a week and a half ago. This position is up for us. So we have both positions in gold and silver, both of these continuing to press into new highs. I have no idea where this is going to top out in the grand scheme of things. All I know is that primary trends are up and probably going to continue to go up for quite a while, particularly in gold's case. If we go back and actually just look at gold itself, has been in a long-term secular uptrend, and we finally got the break back up and over the 2021 highs nearly 4.5 years later. So I do think that this, if you think about the length of normal cycles, both secular bull markets and cyclical bull markets, these tend to not, particularly in gold's case, run for just a year. They tend to run for sometimes multiple years. Put that in the backdrop of a macro liquidity kind of bullish thesis where central banks are easing rates and the financial system is cutting reserve ratios, etc. We will be creating more money. That liquidity comes into the market. You want to complain about inflation? Gold's a great thing to own in inflationary environments. Feel free. Gold breaking out. Good job. We nailed this. And gold miners. Look at that. Having conversations about gold miners. People being frustrated that gold miners weren't keeping up with certain stocks. Now all of a sudden they're up 20.5% in August. Do not close your winning trades, folks. I cannot stress this enough. You don't need to be timing the market perfect. As a matter of fact, there's only two people I know that time everything perfectly. Those are marketers and liars. Instead, just buy the strongest areas of the market when you can find those and wait. That's what we do with gold miners. 14-year highs here, 20% plus month in GDX, positions that we hold. It's always a good thing when you have to slide that circle up. All-time highs we own, AEM, KGC continuing to push, 13-year high, OR, all-time high, NEM, multi-year high. So again, none of this is revolutionary, folks. We didn't reinvent the wheel. We just bought breakout spots in the leading part of the market and waited, and now we're getting paid handsomely. So congratulations. This month was the month for gold miners. Good job. I cannot stress that enough. But I want to take a second to pull back here. And I know obviously today's a down day and we're heading into September, and it's Labor Day weekend for Americans out there. Markets are closed Monday, excuse me. So keep that in mind. And, you know, from my experience, particularly of running TTI, so I've been trading for 15 years, been staring at screens. Every summer tends to be tough, but since running TTI and not only needing to kind of manage my own emotions, but help people manage their own emotions as well, I can tell you with 100% certainty that people tend to lose their fucking minds during the August and September corridor. Multiple reasons, I think. One, most people are checked out of the market. It's summertime. You know, we want to be at the beach. We want to be celebrating with family. We have kids out of school, etc. They already have one foot out the door. So any scary headline that comes across, immediately, they're already out. They're out. That's it. That's the end. We had somebody 2 weeks ago email me. He was terribly upset prior to the Fed decision, or the Jackson Hole speech, that the Fed was political, they were going to screw Trump. God bless your heart. I don't give a shit at all. And it turns out that he didn't, right? The Jackson Hole speech was, at least the market liked it, popped up on it. So he was wrong. Imagine that. Just August and September tend to be tough. So when we take a step back and we look at this objectively from a price standpoint, and it could be difficult for some people to do that. Take a step back and look at the bigger picture here. NASDAQ is up 1% on the month. As of right now, I know we have another couple hours to trade on a Friday and we're already down 1%. Maybe we close down 10% this month. Who knows? It could happen. Don't make fun of people. It could happen. You've seen the people on Twitter post the fucking rising wedges going back 25, 30 years. It could happen. You know, one of the funniest kooky bins on Twitter, you got Northman Trader and like the Great Mantis. They throw rising wedges on the Dow Jones Industrial going back to the 1929 crash. These guys, I mean, sure. Yeah, we could lose 90% of the NASDAQ in one day. That's fine. Drop a nuke on Wall Street. Maybe that'll do it. I don't know. Anyway, for the rest of us that are rational, the Qs are up 1% on the month in a month where the Qs are generally flat or red. Do you understand that? Seasonality dictates going back to the 50s that August is either flat or red for the NASDAQ. And we are up 1%. Yes. Was it the most fun environment to be trading tech this month? No. I understand the frustration. But the bigger picture here is that the NASDAQ should not be up 1%, and yet it is. So running into next month, when we go through the seasonality on Tuesday inside of TTI, the monthly market blueprint, and we look at September being seasonally weak, are you going to fall for the Northman tweets? Are you going to fall for the Great Mantis tweets or the CBNBC guys that in early April told you the next Great Depression was coming, and instead it was arguably one of the best times to buy in the last 50 years? Q's up 41% over 5 months. Hello? Probably not. Seasonality matters to us, but what matters more is when seasonality doesn't play out the way it's supposed to. And in this case, it's for the bulls. NASDAQ is up 1%. You got to keep that in mind. The S&P 500, flat usually in August, slight up tilt with defensives leading. It's up 2%. Do you think defensives are leading before we get into the data? Do you think defensives are leading? Easy way to find out. You can look at risk ratios. That's what we do inside of TTI all the time, so that's what we're going to look at here in a second. But on the monthly, the S&P is up 2%. That's better than average on a good month. Look at the Russell 2000. Absolute stick. By the way, a couple weeks ago, sent out a newsletter that said, could the small cap space be the next space to squeeze? Since then, the Russell's up 6%. I had more people unsubscribe from that newsletter and some nasty emails telling me that small caps are shit than I've had in a while. I have come to be immune to people emailing me and unsubscribing because I typically take that as a pretty good contrarian signal that whatever I said is probably more right than I think, because most people are fucking idiots. I'm allowed to say that. I don't care if you subscribe to the free material. If you don't agree, that's fine. If you spend the time to email me telling me I'm a moron, I know that you're emotionally involved in the market and you're probably going to make the wrong decision. Small caps sticking its best month since November of 2024. Rate-sensitive groups are flying this month. Before rates are even cut, the stock market is the greatest arbiter of truth. What do you think is going to happen to rates in September if small caps are up 7% on the month? Take it a step further. How about home construction? Up nearly 14%. Do you think these rate-sensitive areas of the market might be sniffing something out that the idiots on Twitter don't understand yet? The dipshit farming engagement on Twitter for $2,000 a month from Papa Elon Musk is going to give you more alpha than the financial institutions buying the fucking stocks? Is that how this works? I don't think so. I'm following the flow of capital. They're telling me rates are getting cut in September. Small caps, home builders, regional banks, rate-sensitive areas of the market are doing well. So that's what I'm going to look at. From a risk ratio standpoint, you don't believe me? You don't need to believe me. Let's look at this. Again, I can prove it to you. Think about it, grand scheme of things. Risk on versus risk off. Can it be any easier than consumer discretionary against consumer staple? I mean, honestly. Consumer discretionary are stocks like Tesla, Amazon, Home Depot, Lowe's. You have a bunch of money in your bank account. Markets aren't looking terrible. You got a job, you're employed. You're out spending cash. Discretionary income. And you got consumer staples, right? Walmart, Costco, Kroger's, Pepsi, Coca-Cola. All of a sudden you lost your job, you don't have a large amount of money coming in, but you still got to buy stuff, right? You still got to eat, you still got to feed your family. You're going to Walmart more. You're going to Kroger more. That's how you can tell when financial institutions are starting to shift risk, when they sell the consumer discretionaries for the consumer staples. We know this. You can go back over the last 25 years and look at this data. So let's do it. On the month. I have not looked at this chart yet today, so I could be talking up the greatest thing ever, and it could look like shit, but it probably doesn't. And of course it doesn't. About to break out into cycle highs. Take this into a candlestick so you can see on the month we're up 3%. So now, are financial institutions running for the fucking hills right now? Is the consumer actually weak? Or is that just a narrative on Twitter to get you to sell stocks in a seasonally weak period of the market? You can make your own decision. How about equally weighted? Right? Tesla, a big drag on consumer discretionary, by the way. Decent couple of days, but a big drag on the year. So why don't we equally weight it out? Tesla is going to be the same weight as Home Depot and Lowe's and the smallest consumer discretionary name in the ETF. And Walmart is going to be the same market cap as the same smallest consumer staple name. Why don't we look at that? This is your classic risk on, risk off measurement going back to the dot-com GFC days. Right? Literally offense versus defense. Look at the candlestick. 5.5% up. Again, are all-time highs good? Offense beating defense, is that a good thing? Is this indicative of banks and the people that move primary trend? Are these guys running for the hills? No, they're not. Now you can choose to believe whatever you want. You want to sell all your stocks because the boogeyman's out there, feel free. But the banks aren't. The financial institutions aren't. JP Morgan's not selling nothing. Right? And unfortunately, at the behest of the retail trading community, we don't influence primary trend. We don't have the buying power. The banks do. The financial institutions do. The professional money managers do. These primary trends cannot be manipulated, folks. Charles Dow told us that 120 years ago. Short-term stuff, absolutely manipulated. If you don't like that, don't play the short term. Primary trends are not manipulated. And right now, primary trends are up across the board. The NASDAQ, the S&P 500, the R2K is shifting back to the upside finally. Risk ratios are telling us, right? You do not want to be a bear here. Or if you're going to be a bear, just know you're fighting the primary trend, which in my line of work over the last 15 years has not been the greatest way to make money. Everybody wants to be the next Michael Burry. God bless your heart. I know a graveyard worth of Michael Burrys out there. Okay, from a sector standpoint, month to date, materials leading as of right now, healthcare, discretionary, right? Seasonally weak period of the market, still some nice moves. By the way, just talking about Tesla, I have not looked at Tesla on the monthly here. I don't know what to expect, although we do have a position in Tesla. Let's bring it into the daily first so you can actually see this nice little consolidation fractal. We started to buy here, and on the monthly, is Tesla actually up? Tesla's up 10% on the month. That's wild to me. So a big push there. Consumer discretionary names coming out of Tesla. That's not a bad thing, folks. Looking out, month-to-date performance, seasonally weak period of the market, tech's only down 0.17. I don't think that's bad. I think this is great. These sectors are supposed to be down for the most part. Most of them are up. What about industries, excuse me. Gold miners are up fucking 20%. Home builders are up 13.5%. Solar is up 13.5%. Solar. Didn't the Trump administration just announce that they were cutting subsidies to the solar companies? Clean energy was out the window. Didn't the Trump administration say that? That's weird. It's the highest stick this year in solar. What happens if we break above 41.5? Is this the beginning of a new uptrend? Or am I crazy? Or is the Trump administration cutting sanctions a bigger deal? You can trade the news headlines, or you can try to trade the fucking uptrend. What about clean energy? Another one. Aren't they crushing EV mandates? Right? Aren't the subsidies from Tesla going away in September? Weird. Is clean energy closing at nearly 2-year highs? It's up 10.5% this month? That's weird. So wait a minute. The Trump administration is taking away the stuff that was supposed to help this industry, and yet it's going up. And under the Biden administration, all those subsidies were there, and all it did was go down. That's weird. I can't wait to read a Twitter thread with some asshole telling you to sell or short EVs because the mandate's going away when the goddamn industry group is hitting multi-year highs. I can't wait. It's going to happen, folks. I'm telling you now. I'm telling you now. Look back at this in 6 months. I would be very, very surprised and poorer, because I have bought this part of the market, if this is not drastically higher than where it is right now. Both solar and clean energy. Right? It's insane to me. Don't follow these guys. Factor analysis. It's a great way to look at market caps. We were just talking about small caps. Sticking a banner month on the month. Small cap value outperforming the S&P by 6.25%. Small caps in general up 5%, small cap growth up 4%. Is that risk off? Arguably, the shittiest companies in the market right now are outperforming everything else. Is that risk off? Do larger financial institutions buy this crap because they expect interest rates to go up? Or do they expect the most debt-heavy and interest rate-sensitive areas of the market, such as small cap crap, going down if interest rates are going to stay high, or going up if interest rates get cut? Which one is it? Is the market wrong? Feel free to short it. You think they're going to hold because the Fed's political or whatever fucking insane conspiracy theory you want to cook up? Feel free. But the stock market does not agree with you. Speaking of which, I'll ask you a little question here. For those of you out there that know a little bit about credit, or at least pretend to know a little bit about credit. I love the macro guys. You know, I have 2 degrees in economics. My favorite in my undergrad department was macroeconomics. I absolutely loved it. Unfortunately, absolutely zero of it has ever helped me make any money in the market. You know, you got 30, 40-year vets on Twitter giving you their opinion on macroeconomics. They're happy with a 12% year. You got dudes with $5,000 Robinhood accounts subbing to their material, happy that they're right, but they've only made $520 this year. Would you rather be right or would you rather make money? High yield corporate debt going out at its highest monthly close this bull market cycle is not bearish for credit. Right? The larger financial institutions are willing to buy the riskiest corporate debt that they can. It's probably not indicative of a market that's about to roll over. Is that hard to understand? When we look at it from a risk ratio standpoint, high yield corporate debt against treasury bonds. Does this look bearish to you? I'm not going to sit here and tell you this is the most bullish uptrend, but are we drawing down? No. We're not. This is totally fine. Credit looks fine. So again, there's so many different theories out there that this market is going to fall because of this, credit, and consumer can't afford anything, and September seasonality, or my absolute favorite right now is this market is due for a correction. Is it? Going back to 1950, we average 1.1 correction per year, meaning a greater than 10% move. We got that from February through April. We got a 20% move in the S&P, a little bit more than that in the Qs. We just had a market correction. And you have people on Twitter freely giving you their terrible opinion in between shifts at Starbucks that we're due for a correction because they didn't buy the fucking bounce in April. It's not that we're due. They're just praying. They want a correction. They need a correction to feel comfortable to start buying stocks. But here's the issue. Would they buy even if there was a correction? They didn't do it the first time. What makes you think they'll do it the second time? Probably not. Just being honest with you folks, probably not. They probably will not buy. Growth versus value. We're going to throw momentum on as well. This has been in August. Value outperforming. Very normal for August. Very, very, very normal. September, probably going to see the same. Not necessarily on an absolute basis, but from a relative basis, yes, value will arguably outperform. That doesn't mean growth is going to get killed. It did not get killed this month. It's just taking a step back during the very normal summer volatility. That's it. That's it. Okay, last thing we're going to talk about, and I'll field any questions that you guys may have, so feel free to go ahead and ask them right now, is crypto. I'll tell you the first thing is there's no harder job in the financial media market than being a crypto influencer. I feel bad for the people that have built their audiences exclusively talking about crypto, because it doesn't matter if crypto's up 5%, down 5%, up 50%, or down 75%. The people that are attracted to crypto are the same people that scroll TikTok for 72 fucking hours a week, and they can't watch a video longer than 3 seconds without a maze runner on the side. If you have half of a brain, you understand higher volatility assets move in both directions. It's the price of paying for outsized performance, the volatility. Primary trend wins. If you need help looking at a primary trend, go to the daily and throw a 200-day moving average on. Do whatever you need to do. Total crypto market cap is up, and we're higher than we were at the beginning of August. Bitcoin's drawing down, above an upward sloping 200-day moving average. Feel free, sell everything. Be my guest. I don't care. But we were just here earlier in 2025. Was it the right time to sell? No. Is it going to be the right time to sell here? Probably not. Probably not. Total crypto market cap still in a primary uptrend. Solana's the big winner on the month. Was just at new 6-month highs earlier this morning before a pullback. I continue to believe Solana is the better R to R here between Solana and Ethereum. If you're inside of TTI, We own Solana. I think there's a longer runway here. I think Solana doubles before Ethereum does from this point. Still have lots of Ethereum on the books. But Solana, the better play here. Price target's 260 and then 415. Then Ethereum. Drawing back, by the way, drawing back in the face of insane institutional flows. You got Tom Lee, you got Kathy Wood now screaming Ethereum is the play, and yet we're down. Which is why we don't give a fuck about the headline. Which is why we bought back here before nobody wanted. And then we added up every single trade we have on Ethereum is free. We have expiration going out to January of 2027 that's free. Ride the waves, baby. If gold's going up, crypto's probably going to go up too. It's all a macro liquidity play. That's all it is. Liquidity enters the market, permeates through. It finds its way into the riskiest parts of the market in risk-on environments, which we're still currently in. The summer doldrums tend to bring out the worst emotions in people. Last thing I want to bring up, because I completely forgot about it, and we started opening up positions in China last week. We added some this week. Start with BABA because earnings. We bought the BABA play a couple of days ago. Nice head start here, up 11.5% today. We're going to look to take and turn those free as quickly as we can. BABA has been a notoriously terrible trading vehicle for the last couple of years, but if we can turn that free, that'd be great. Did we just turn a corner in BABA? We could. Gap up on ER, 11.5%. News out that they're battling against NVIDIA now. AI chips, whatever. We have a position. Not bad. Chinese stocks as a whole, I want to point something out. From a day-to-day standpoint, looks kind of choppy. Smooth it out over a month. This is going to be the highest monthly close in Chinese internet stocks this cycle. Right? We don't do things randomly in TTI. We just follow strength. China is exhibiting it, so we grab some. We have a free trade in XPEV. Short-term trade in Baidu that I think turned free today, if I'm not mistaken. Tiger, for those of you that are still holding this, check that out. We've held this for a long time. We still own it. Look at the stick on this month, 31%. Right? So I don't know if this is going to be the absolute turn on Chinese stocks or not, but it's a nice start. If we can turn this free and hold it into next year, that's what we want to do, right? So good job on the Chinese plays. Fantastic job on the gold miners trades. Great job on the gold and silver miners plays. We'll see what happens rolling into September when it comes to the higher beta growth stuff. Overall, it was a good month for that area of the market. Obviously, this Friday as it pulls back, it's going to feel terrible. But again, we take a step back and objectively look month over month. It was a good month for risk assets. It could have and should have been a lot worse should seasonality held through, but it didn't. Data moving forward. Before I answer questions, for those of you inside of TTI, please, our monthly market blueprint will be on Tuesday, 7 p.m. Eastern Standard Time. If you were there in August, we laid the roadmap for how we wanted to play August, and it was almost perfect. It's very important to show up to those sessions, or if you're not there, watch them in your free time. We lay out the entire roadmap for how we want to attack September. We look at everything from our top-down process. Seasonality, market breadth, market sentiment, primary trends, leading sectors, leading industry groups, leading asset areas, and trades we want to put on. Those are the most important sessions to be a part of because it puts us all on the same page on a month-to-month basis. Okay? Let's go ahead and answer some of this stuff. Hello, gold bugs. Great. Great month to be a gold bug. Fellow gold enthusiasts. Except the AMD. I'm still long AMD. I get it. Marketers and liars, they're everywhere. Martis sucks. Robin, what do you mean unsubscribe to you, buddy? Feel free. Feel free, man. If you can handle the heat. Microcaps, yeah. Dude, this is what I'm talking about. Got another guy who gets it. Are microcaps up 8.5% into new cycle highs if the market's about to roll over? Like, come on, folks. Right? I care more about what price is telling me than I do about the people on fucking Twitter. I just don't give a shit. These guys sell subs for $10 a month and put triangles on charts and tell you everything's going to zero. Like, fuck them. It's like straight up. A crypto report we did not do yesterday because of some technical issues. I apologize. I had to re-download Streamlabs and it was a fucking mess, so I apologize. Wyckoff is fantastic. Stage analysis is fantastic. Bigger picture stuff, Wyckoff and stage analysis just gets you in primary trends. That's all it is. It's just a read on primary trends. Stage 4, stage 3, stage 4, stage 1, stage 2. It's time and time again. I mean, this is like classic stuff. Wyckoff, for those of you that are enthusiasts, Wyckoff came out with this based off the Dow theory. So if you really want to get into the nitty gritty, here's how you should learn this in order of how early it came out. Dow theory first, Wyckoff market model second, stage analysis third. They all build off each other. Dow theory, obviously coming from Charles Dow. He's the one that came up with different types of trends, primary, secondary, intraday, etc. Wyckoff came out and said, wait a minute, we can chart these things. And there's specific setups. He came up with, little, we call them scoop and scores, but he had a different setup. Something like that would be a Wyckoff buy. And then Stan Weinstein came out and updated it again through some moving averages. I love it. This is as pure TA as you can get. Trends, and it all started with Charles Dow, and it's been built upon since then. So that's the idea there. Dude, that's funny, Robin. We were talking about that actually. There's an article that just came out that China's going to produce, by 2030, China's going to produce more solar power than the entire United States even uses. And that's like a mind-blowing stat. Down here in Brazil, it's not as efficient yet. You would think it is because of how much sun we have down here, but it's incredibly expensive to get it installed. So it's really only built on businesses and rich people houses. But yeah, I mean, I totally think it's worth it. Busiest travel week ever. We talked about this, so anecdotal evidence, hands up here, anecdotal evidence. I was in Europe last year. My wife and I were there for almost 2 months. I think a little bit more than 2 months. And it was the busiest I've ever seen airports ever. And I've been traveling for 20 years. Sitting in the middle of Madrid airport, and you couldn't even sit down. Like, it was so busy. This is, by the way, when I'm scrolling on Twitter, we're writing reports and stuff. Consumers dead. Like, airline stocks weren't really responding well. Consumer didn't have any money. One of my favorite ratios to not to get into economics and macro data, but for those of you that really do think that debt is a problem, go and look at the ratio between consumer household debt and consumer household income. We're below pre-COVID levels. Like, it's insane. Yes, debt's up, but so is income. So that matters, right? So the consumer's dead or whatever. I was sitting at the airport writing a report like, if the consumer is dead, where the fuck did all these people get this discretionary income to travel? That blew my mind. And then a check-in on jets here. Not the breakout that I had expected. This is still a massive stage 1 base, but we will eventually get the breakout into a stage 2. And some airlines are already into stage 2s. From an industry standpoint, not yet. But yeah, I'm on board. I don't think the consumer's dead. I really don't. Has the group added into SOL? We have not added into SOL yet. That's a good question. We're using SOLZ as our vector, which, by the way, is up 17% this month. Super choppy, I get it. But still, bigger picture here, up 17%. From an absolute standpoint, we have not entered in yet. But yeah, good call. The entry is 206. I think we're going to, let's wait until next week. We'll talk about this on the Monday night strat session. Good call. Well, let's wait for the weekly close here. Above 206, though, you're right. For those of you in TTI, we will be adding in above 206. Next PT up is 260. So yes, Alex, right on. Baba made sense. Sometimes we get lucky, which, a lot of it is luck. For anybody out there that says there's not an element of luck to everything that we do in the market, are complete fucking horse shit. There's definitely an element of luck. But yeah, I mean, it made sense to me. I've been burned on Baba a couple of times, so this is not my favorite trading vehicle, but when the market says to take it, you take it. We took it. Well, like I said, the best case scenario for Baba and some of these Chinese plays is if we can flip them free as early as possible and hold them for the next 6 to 12 months without risk against our account. I think it's just going to be infinitely easier because I can tuck these away in a category. For those of you trading in TOS or whatever, what I like to do is I like to take trades that I have a lot of time on that are free and I don't want to fucking stare at them every day, and I put them into their own little collapsible group, and then I forget about them. I'll look at them once per week, twice per week. If I happen to pull up a chart and I'm interested in what they're currently at, worst thing to do though is to get into a free trade and then stare at it as it draws down, as the market consolidates or whatever, and you're like, should I close this? Should I close this? Primary trend still up, trade's still valid, but it's pulling back on me. Should I close? Fuck it. I tuck it away. I don't even look at it. If the chart becomes invalidated, then I'll close it. But looking at it day to day and like sweating doesn't do me any good. So I'm hoping to do that with BABA. Same thing here with IBIT. Reminds me of IBIT, right? We have some IBIT. I have some IBIT for December. It's down right now. I mean, obviously Bitcoin's down. This is down. But when I look at this type of setup, like for me, I'm not a soothsayer. I have no fucking idea exactly where things are going to bounce or anything. This to me looks like an uptrend that is up, down, up, down, up, down, up, down. I mean, it's an uptrend. You want to sell at a previous resistance, turn potential support. This is TA 101. I don't know why the paintbrush looks like I have Parkinson's disease right now, but let's go ahead and bring it down to the daily. Very, very basic TA 101 is resistance turned into support and uptrends, and support turns into resistance and downtrends, right? What happened here? What's going to happen here? What happened here? I mean, come on, folks. Like, right, this is baby pip. This is YouTube level stuff. So if you don't want to hold it, I don't blame you. Feel free to close it. Am I going to close it? Absolutely not. I will not. I think this bounces. So yeah, good question about BABA. But IBIT, same thing. Buy it, throw it away in a collapsible group. You don't have to stare at it every day. I did mention RSPD against RSPS, closing at monthly all-time highs. This is arguably the most important risk ratio when it comes to offense versus defense, and everybody fucking uses this. Ever. You nail this trend, you're probably in the right direction of the market. You don't believe me, go back and back test it. Every time this ratio breaks down, you're probably in a bear market. Where did it peak? November of 2021. Where did it bottom? July of 2022. What happened there? Bear market. What happened here? February through April. When did this peak? February. When did it bottom? April. Right? So you're getting a breakout in all-time highs, you want to complain, and do whatever you want. You're an adult. Probably not, though. 786 fib level, proper stop for long swings. That's technically going to get you out at a 3-to-1 setup. I'm not going to do the whole... I'm not going to... I don't know. What can we do here? BABA? Prove it to you really quick. So almost a 3-to-1 setup if you get out at the 786. It's like a 2.8 or a 2.9 or something. 2.8. It's almost a 3-to-1. So if you're looking to capture, that 3-to-1 setup, that 786 fib level, from a mathematical standpoint, it's a pretty good place to stop. But we're technical traders, and there's more things that we can add. So for example, you're trading an uptrend. This is just purely hypothetical talking through this. You're trading an uptrend. What makes the most sense to hold as dynamic support in an uptrend? Probably your long-term moving average, which in this case is a 200-day. So I would move that stop up to right below the 200-day. You break below and close the 200-day, probably not going to continue to stick this breakout. And lo and behold, your RR goes up to 4.5, almost 5. So yeah, 786 is kind of standard, but you can build on top of that. I think previous price action is always going to be more important than that 786, but the 786 is like the pro quo, if that makes sense. 200-day moving average in a hierarchy of what's more important, for me, more important than the 786. But can't go wrong with the 786. I do not have any more ING. I actually sold it way too soon. I'm an asshole. I missed out on a decent amount of profit on ING. I was trying to be, I'd fuck up too. I was trying to get cute and rotate some capital out of some of the financial names that were stalling and into some higher beta stuff, and I missed out on both ING and BBVA. I didn't miss out. I made money. But these ended up actually outperforming some of the stuff that I rotated in. Lo and behold. These two stocks in particular, they might be pulling back along with European financials, but again, for those of you that are in the group, do you think we're going to stop buying this stuff? No. This is a secular breakout, right? We're going to keep buying this stuff. But we're going to buy them at logical levels. So Good shout out on ING and BBVA. I'm not in it, but I fucked up the trade personally. Okay, so that's it. Not a bad month, right? I'm going to post this over on the market research side, see what happens on Saturday. Monday night, I'll be coming out with a strat session. We're going to kind of go through a shorter term version of this with the updated crypto stuff because it'll be trading all weekend. And then again, Tuesday, give me an hour of your time at 7 p.m. Eastern Standard Time. It'll be worth it. We'll go through everything from a bird's eye view and come up with some trades as well. Okay? For those of you not inside of TTI, if you're interested, the link is in the description for the newsletter. I'll send you all the info if you sign up for the free newsletter. I send out something every single day. It's generally worth your time to read it. Enjoy the rest of your weekend, folks. Congrats on a solid August. Let's have a solid September as well. See ya.